All right, guys, let's do a daily recap for 5-6. This is my second one. The first one went a full half hour. That's how rambly I get. Okay, so when I tell you guys I stop it because I feel like I'm rambling, that's why. Because I can just go. Um, the number one thing I want to cover is hymns. I really wish I put this on the daily watch list because I did want to have it on my radar. I just didn't think it had really a great opening drive. Even though earnings was good, like we do have like a very minor bullish divergence here on the RSI, but it's so minor. And then we got the nice opening drive move off the open. Now, I was also focused on Apple, seeing if this was going to turn into a give and go. So, like, we've played this a lot. Like, a stock gets a big opening move, manages to not break any key levels. Now, this one was a bit more iffy because we did break the after hours, but we didn't break yesterday's levels. And if I look at the daily, we're starting to fall apart here pretty uh, almost profoundly for Apple. So I'm starting to build up I've already built up a swing short position out in August, but I'm also looking to get more aggressive in the short term on this one. Even though I do think the market broadly should go higher from here, Apple's seeming like it's definitely a standout weak name here. So I was trying that short position this morning. You get overbought right out the open, can turn into a great short position. Ended up not panning out, and it ended up barcoding on the 15-minute. But while I was keeping an eye on this one, I noticed off the first move with HIMS, I set a bunch of orders to fill at like 165. And then I'm staring at Apple. I go back and look at HIMS, and I'm like, wow, this thing's moving. I look, nothing's been filled. Those contracts I tried to fill at 165 were already at like 280. So then I'm panicking back in, and I'm trying to get back into that position. Ended up buying the let me pull up the trade tracker here. It's one of the beautiful things about the trade tracker is everything is automatically posted here in the Discord. Link in the description, by the way, because I think I'm going to upload this to YouTube as well. 54% on the first position. And we entered into the $50 calls at 171, so those for 264 into this original pump. Ended up selling about here right when the stock was getting overbought. When stocks run like this, the first thing I want to see is how the first dip reacts. If the first dip reacts well, obeys the EMAs, it's an amazing telling you that it can run for the rest of the day. This also had a very unusual variable to it, where we had the RVOL, the relative volume, pumping into the rally. So typically when these pan out, RVOL will either stay pretty stagnant and pretty level, or it will actually slowly drop off as the stock continues to rally because interest drops off into the day. That did not happen with HEMS. So RVOL is actually building into this rally, building even into the retracement, telling you that buyers are still stepping in as people are taking profits. This thing ended up defending the EMAs beautifully, and then I made a crazy mistake. Okay, so right when we come down to this EMA, I bought some 54 calls and at 125, and then it kept retracing further into the EMAs. As you know, I'm trying to get a really good timing here, right? So then I go to the I start going to my higher time frames, and I start watching like the 10-minute and the 15-minute, and I'm watching these stronger bullish EMAs on these sturdier time frames, right? And I'm seeing, okay, it's still pulling back, so it's pulling back to this, and then right as it gets the touch, I'm getting ahead of myself. As it's coming down, I was like, oh, let me buy more of the 54 calls for 110. And so I hit my hotkey, and I saw I sent that order in, and then I look at the bot, and it says positions closed. So I look over at this, and it tells me I've fully closed the position. I meant to buy more. Over a year, I'll probably do this like 3 times in total. Some of you guys have been trading with me for years. It's very rare occurrence. Did not mean to sell those at all. So after doing that, I actually loaded up the $52 calls even more aggressively on the perfect touch of the EMA. Got more aggressive with my delta, more aggressive with my sizing, seeing the R vol climb into this, seeing the perfect touch, thinking this thing can rally the rest of the day. And then we basically handled it textbook risk management from there, closed partials at 21%, fully closed the first entry, the 52 calls, the first entry at the 46%, then rolled the position immediately into the $65 calls for May 16th and let this position swing from there. Now, I would have been more aggressive for like end of the week had we not had the big Fed meeting tomorrow. Be mindful of that because this is a play where you definitely could have even been more aggressive with like some shorter dated contracts, like end of week contracts. And but I'll be playing with the 16ths. Maybe closer to the end of the week, I'll start buying some end of the weeks after the Fed speaks. But even if this name like opens with a dip tomorrow, I'll be buying dips on here. I'm looking for continuation on here. Now, here's the other thing I did. After seeing that move on HIMS, like very rare, I thought the earnings was good, so that's why it was on my radar at all. That's not true. I've been watching this name actually for a minute. I've been watching this name ever since this short squeeze hype over the GLP-1s. And those going to be coming off soon off the product line. And then we got that earnings where they were still giving great growth metrics, okay? Now, I just looked at this earnings snapshot. I had never done a deep dive on the stock. Shame on me because we have some members who have been talking about the stock for a while. Now, this is where, Josh has to put his foot in his mouth because I've been very negligent of this name because it has been so popular among retail and on like Reddit groups that I have not really given it the time of day because it's been such a popular retail name. However, after doing a deep dive tonight, HIMS is an amazing company. It's one of those unicorns. It's got all the makings of a great unicorn. Founder built it up from zero. It's as the company is expanding, its revenue is also expanding with it. They're getting amazing returns when it comes to advertising. They are revolutionizing an old industry in healthcare. They are the leader in that as well, beating all the competition, healthy cash balance. So like if we do get, because remember on the macro, we're thinking everything's going to get crushed, right? Potential recession. I'm thinking probably already the beginnings of a technical recession, but we could get a brutal economic recession. That could actually be a great bull case for HIMS actually, because if you start wrecking the competition from HIMS when they're in such a early leadership position with lots of cash like this, they can literally go out and buy the rest of the competition and then emerge on the other side of an economic recovery much stronger. So it's got everything you want to see, right? The metrics for this company look like Google in the early days, Microsoft in the early days. It's exactly what you want to see. Amazing margins. Even though the GLP-1s are going to be coming off, we still are also be mindful of, how do I want to phrase this? A government that is infatuated with the idea of deregulation. We haven't seen much, so I don't want to say that there's going to be lots of deregulation, but there's lots of talks of it. So if that is the case, you can take a lot of these, you could add a lot of drugs to HIMS, what would you call it, product line, to their sales, rather, if they no longer become like prescription, but over the counter. So the digitization of healthcare plays very well, and this company is positioned amazingly to benefit from that. So the next thing I looked at after doing that research was like, okay, who's holding this? Because all I see is crazy retail. And that's where I got really excited, because if we look at the holders for HIMS, there's some baller names. Okay, BlackRock, Vanguard, no one cares. No one should ever care. And I'm gonna mention this because there was a comment on one of my old YouTube videos where someone, I think it was the MSTR video, where someone's like, "Well, BlackRock owns MSTR." I'm sorry, but you could literally type in any ticker, and BlackRock's probably a holder. BlackRock and Vanguard, they're both indexes, so it does not matter. I do not care what these guys hold. Okay, I couldn't care less. It doesn't mean anything. But Valoron, now this hedge fund. Okay, actually, let's even look this up because I didn't even look this up. January 1986. Beautiful. So it's been around for 40 years. For 40 years, they've been killing the game. And more so than that, this is actually a big... they've had outstanding performance in healthcare stocks. I believe their performance has even beaten Buffett's over that time period as well. This is a hedge fund that is known for picking really great names and holding them for long term. You know, it's a lot of these different names, State Street, Renaissance. You know, these are really good names that you want to see holding a name like this. Okay, so I see that and I'm like, what? These are real companies holding this, not just, you know, retail hype. They've got real amazing metrics. I can't figure out for the life of me why there's even such short interest on this stock, especially after that last earnings. You would think they'd all get burned out pretty much immediately on the CEO saying that there's still going to be amazing revenue growth even with the GLP-1s coming off. So yeah, this is a name I want to put my long term. And this is one of those moments where it's like, I definitely should feel a bit, I don't know, I want to say ashamed, but I don't think that's the word. I should feel silly for not giving this the due attention it deserves sooner just because, oh, Reddit likes it. It's probably fleeting and nothing. You know, so be it. I get a little pretentious, I guess. Anywho, let's talk about the upside. We have the Fed talking tomorrow. Market close was a bit odd. We got conflict with India and some tariffs. Doesn't look like it's going to expand to anything else. Then we got some China news in the after hours. Oh, there's also this pump where Trump told us that like Thursday, Friday, or Monday, we're going to get some news. Might as well make a note of that. Hopefully, well, I can read it, even if you guys definitely can't. So be mindful of that. When I first hear this, I'm thinking, okay, he might be worried about what Jerome's going to say tomorrow. So he's like, well, hold out, guys. Don't sell your stocks because on Thursday I've got great news. Like, that's literally how it feels to me. But then we got the U.S. China sitting down for talks, which honestly to me still feels like an absolute nothing burger. But the market got really excited, especially since literally this morning Bessent came out and was like, yeah, we're nowhere. Like, we haven't even sat down for talks. And the market didn't react at all to that. And then it reacts massively to this news on the over. It just feels odd. But looking at ES in the futures, it's holding. So be it. But that's kind of the funny business now. We're still in the retracement phase. We haven't like reclaimed a new high. Overall, I still think we're on a bullish trajectory. I think you need to be mindful of the fact that we are losing some momentum on the daily charts pretty much across the board, unless you're Microsoft. Microsoft looks like it will be what leads us on the way up. So let's keep a close eye on this one, see if they kind of break over this 446 level. They might make a shot at the highs. That does not going to be enough to make me think that we are out of the trenches. We're still in the short box, I guess I should call it. So I still think we're headed towards this upside target. Now, if we have an explosion off of this EMA convergence and we come to like this 557, 556, Excuse me, forgot how to breathe. And we're like in mid-May, so like if we manage to do that next week, it is gonna make me pause, and I might continue to try to feel out some shorts on things like Apple, where my positioning here is small, so I'm willing to really sit in this and build up that position, continue to buy those puts. If it wants to bleed up against me, I think the high is in. I don't think we actually come over. Maybe worst case scenario, we get over 216, but I don't think that's actually very likely at this point, especially how bad that earnings went. I mean, Apple's just in a storm, in my opinion. You got a 2% year over year growth. I mean, just you look. It's just, if you don't believe me, go look at Hims, go look at its metrics, and go look at Apple's, and just see how you feel after you read through Apple's earnings report. You just feel like, ew. This is so unexciting. 2% growth. It's not, oh God, it should not trade like a value company. It should be trading like Intel. It's okay, we're going to short it. But I wouldn't like to see this hit my target around mid-May. It would feel like it's a little too early in the cycle. I would prefer us to start getting some of the downside catalysts when we get some data next month, and not to see that now. Now, that said, it still could turn over that early, which might make me say, okay, maybe we can actually pan out to get these lows well before the end of the year, and we're gonna speed run through this W that I think is gonna pan out. Potentially, it could happen. Right now, with how odd the market's been, I'm trying to be as open-minded as possible. I've been playing this stuff still to the upside, even though day by day I'm getting more and more not just bearish, but nihilistic. Nonetheless, we play what's on the chart, right? We follow the price action. But I mean, if we look at the VIX staying persistently high, can't get below 20, no matter how, we went on some miraculous bull run, right? We've made an incredible, actually, what is this move so far? We've made a 17% move off the lows. Broadly from the market, and it hasn't been just the mega caps. It's actually been a pretty broad run, and the bulls are using that for their argument of why the market's so bullish. Okay, why doesn't VIX agree with you? Why is gold still saying that it's the worst thing ever right now? Like, why is gold sitting at all-time highs? Why are bonds still being funky? What's going on with bonds? Why are bonds not reacting? Why are they so down in the water? Where are the bond buyers? Where is the underlying health I need to see to say we're back in a bull market? No, everything in the peripherals, or even the dollar, just like hanging on by a thread. It should bounce off this level, to be clear. I think there's actually a long here for DXY. But if it does manage to give out, there's some sort of catalyst that sends it below 97, look out below and look out for the market too. It's going to get crushed. It's going to go awful. So yeah, that's where I'm thinking right now. I'm trying not to overtrade ahead of the Fed, but I imagine after that comes out, we can get a bit more active, looking for some kind of middling comments, honestly. I think they might kind of obfuscate what's going on and kind of maybe play both sides, or maybe they even come out with like a dovish tone and the market's okay with it. I don't want to hear any surprise cuts or anything like that. That's mega plunge. Market's telling you right now that the Fed's going to be more hawkish than people expect, and I don't think equities are pricing that in. I think this is dumb money chasing this up. I'll do a separate video, but most hedge funds are not in this market right now. Buffett's not in this market right now. None of them bought the lows at all. Buffett didn't spend a penny of his ludicrous cash pile. Smart money doesn't believe it. So, I mean, that right there should, are you smarter than all the best hedge fund managers? Are you smarter than Buffett, who's like 96, who's traded through, who's invested through 7 major crashes? Read the newsletter. It's all in there. Good read this week. Was a good read. Took me a long time to write too, so I would appreciate it if you click the link in the description on YouTube. Or if you're in the Discord, head over to the Weekly Report channel and actually subscribe rather than just reading it, because it makes me feel good. That's all I got though, guys. Have a great night. Be ready for us to get a little more active this week, but today really good. I am definitely going to continue to keep playing hymns. I've got quite the appetite for it, especially after getting all riled up. But I want to play this thing on a good solid break over 50. Even holding, all I really wanted to do was hold above like this high today, and it did that brilliantly. Actually back tested it after hours. So if tomorrow we continue to see price action like that, I'm going to be looking for this thing to go back to 70. And now we'll play it all the way up there. And they've got to add more strikes for me too, because I'm pretty sure on the shorter term strikes, we only go to 60. Oh, never mind. They added them. Beautiful. Let the fun begin. Have a great night, guys. God bless.